Welcome to my video, guys. In this video I'm gonna show you guys what my brokerage account looks like, the platform that I'm using for trading options. So I'm using Questrade as my brokerage account. Like I said, I'm from Canada, and Questrade is a popular brokerage account that a lot of option traders use here in Canada. So what I'm showing you guys here right now is my practice account, and as you guys can see, I'm under, once you log into your practice account, this is what you will see in your screen. So right here you will see, like, I'm just looking at these different tabs right up here at the top. There are balances, positions, orders, execution, and activity. So I'm gonna go ahead and explain what each of these means. So balances, basically right now, this is where I'm in. I'm in balances, and I will, here I'll see how much I have in Canadian and how much I have in US. So as you guys can see, there's total equity, cash, market value, main axis, and buying power. Right here, guys, you'll see there's I have 500,000 Canadian total equity and 508,000 US. So overall, the amount that I have is 1,026,511 and 511. So at the start, I was given 500, a million overall to start with, and right now it looks like I've grown my account by 26,000, as you guys can see right here, 26,000 Canadian since I opened this account. So yeah, if you guys want to know what your balances are, how much you have, cash basically means how much you have in cash, so how much buying power you have, and so on and so forth. And if you have a margin account, you're also gonna see this market value and main axis. Basically, if you have a margin account, you're you're gonna have more money available in your account, but that's not really your money. It's just the amount that you are being lent with when you have a margin account. So let's go under positions. Position basically means the trades that you have. So here under position, you'll see your trades that you did. So in this case, I have Apple. I did a call on Apple, so you guys can see right here. Call 180, this is the strike price, and this is the expiration for this trade. And you'll see the other ones that I have. I have another Apple, one that expires on June 28, one that expires this one's FB, which is Facebook. So this one expires on June 28 as well. This one expires on June 28, and this one expires on September 20. This one is Tesla. This one's Google. All right. So this is where you would go to look for your positions. Look at what your positions are doing, how much you're gaining, how much their current market value is. So you can see them all here. So I want to go over what these mean right here. So open quantity. Open quantity, this means how many contracts you have for each trade. So let's say for this one, for Apple, I bought one contract. That's why it says one right here. This one, it says 0 because this one's already closed. I already closed this trade. That's why you'll see under closed quantity, it says 1 right here. So this one's closed already. And the rest of them also says 1 because I bought one contract for each. All right. So you guys kind of know what closed quantity is, as I'm assuming. So basically, closed quantity is how many of each trade you've closed. Average price. Average price just basically refers to another cool thing actually is right here. It actually, like, if you point your clicker, if you just hover your clicker above the word average price, you'll see the definition. So it tells you the average price you paid for this security. So basically, this amount right here, let's use this one as an example, says 24.90. So this means that in order to enter this trade, you had to pay $2,490 to enter this particular trade right here. Apple with expiration of October 18, 2019 and 180 strike call. So yeah, this is what average price means, how much you paid for or your initial investment. Alright, so let's go over the next one, price. Price basically refers to the current market value of your option right here. So right here it says 24.45, but since you own 100 contract, you're going to have to multiply this by 100, so it's going to be $2,445. So it says right here the amount in the actual amount in dollars. And same goes for the other ones. So like right here, Facebook 189. So as you guys can see, Facebook, my trade on Facebook was down because, you know, I think Facebook went down today, but yeah. So these are the current market value for these positions right here. Let's go over to this one now. Percent portfolio. So percent portfolio just refers to how much of your account balance is this amount that you invested here. So let's say you invested $2,490. That means this amount right here is 23.85% of your portfolio. Open P&L. So open P&L basically means unrealized profit or loss for open positions in your account. So right now I have 1, 2, 3, 4 open positions. Since it's actually 28 today, these right here are expired. So I didn't buy enough time for this one for these ones, and they didn't make enough movement in an upward direction. That's why and I didn't close them either. So in this case, for these trades right here, I'm going to realize my max loss, which is the premium that I paid for, or 610 for this one and 1700 for this one. So this is a really bad trade right here. I didn't buy. Why did I say that? Because I didn't buy enough expiration date, and I'm assuming that both of these are in the money, which in this case, if they are, let me just add the in the money section here so I know. It tells me right here, in the money. I just added in the money in this section, so it now tells me which ones are in the money and which ones are not in the money. So for this one, Facebook, let's use Facebook as an example. This one is in the money at expiration. So what that means is, if it's in the money and today is the expiration, if this is my actual account, my actual live trade, then I would end up owning the stock, 100 shares of the stock, because I let it expire at the money. My broker is more likely going to ask me to buy the 100 shares of stock. They're going to exercise that right because I let it expire in the money. That's why I said that you guys don't ever want to let your option trade when they're in the money to expire. You're going to have to close them before they expire. And so in this case, Facebook, this trade right here, I'm going to end up having to buy 100 shares of Facebook stock because I let it expire. And in this case, I'm gonna have to have that amount to cover the cost of this 100 shares of Facebook stocks. And if you guys don't have that money in your account, which let's say Facebook right now is 190, so you're gonna need 1900 in your account in order to buy Facebook. And what your broker's gonna do is, if you don't have that amount in your money, they're gonna liquidate uh, all of your positions in order for you to pay for that amount. They're gonna exit you out of your open trades, and that's the worst thing that can happen when they do that. So you don't want to, you have to be aware of when your option expires, and you want to make sure that when they do expire that they're out of the money. Because for this one, the other trade that I have right here, Google, as you guys can see, it says no. So this means just this Google expired out of the money, and in this case you don't have to worry about getting exercise. All you could lose in this case is the average price or your initial investment of 1700. All right, so if they're in the money, you want to close them before expiration because you're going to get exercise if you don't. But if they're not in the money, if they're out of the money, then you just let them expire worthless, and the max loss, or your max loss would just be the premium or the average price. There's actually a lot of terms. They call them average price, premium, or basically your initial investment. That's all you could lose. All right. For Tesla, this one right here, it's in the money. So out of all of these trades, I only have one that's out of the money, and that was Google. And I pointed this out to you guys, this one, Facebook and Google, because today's their expiry date and I haven't closed them, so it's good to show you guys what would happen, like what would end up happening in this case now that they're both expired and one is in the money and one is out of the money. And like I said, Facebook right here, this is what you don't want to do. Okay, you don't want to let your option trade expire, because like I said, you're going to end up being forced to buy the shares of a stock that you're not intending to own. All right. So let's go over this one right here, orders. Okay, so orders tab, if you click on the orders tab, you'll see the or your positions that have been executed. So let's say, okay, so there's a lot of things that I want to point out here. First of all, let's look at this one here, Apple, with expiration of October 18, 2019, and a strike price of 180 and call. So in this case, I am doing a call on option 108 with a strike price of 180. This is what this means, 180 call. Status executed. Executed basically means your order has been completed. So you ask your broker to enter you to the trade, and your broker agreed to have you enter the trade for $24.90 right here, limit price. Okay, so executed basically refers to the fact that your order has been fulfilled or has been completed. When I mean order, do I mean by that? Well, in this case, you ask to enter Apple, to buy to open. This is what BTO stands for, buy to open. When you do a call on Apple, when you want to do a call option on Apple, you want to buy to open. Buy to open in order to do a call option on Apple. Quantity basically refers to how many contracts you bought. In this case, one fill quantity. How many contract got filled? One, because you only bought one. Limit price. So it tells you the limit price again. This is the how much you put in your limit price when you were placing the order. Because when you place an order, you have the option of saying to your broker, okay, let me in. I wanna get into this trade if the price is this much. So basically, limit price is the price that you are telling your broker to get you in at, or the price that you're willing to pay for entering the trade. In this case, I put in a limit order of $24.90, or if you multiply that by 100, $2,490. $490. Okay, so fill price. So when I put in this limit price, it got filled at that price because my broker agreed to. Well, my broker basically said, okay, that limit price is reasonable, so I'm gonna get it filled, or like I said, they're gonna accept your request to enter the trade for this price, $24.90. Duration day. Alright, so when you're placing a limit order, you can choose different duration. You can put good till cancel, day limit. So basically what day limit means is that you're telling your broker, okay, I'm willing to enter Apple. Willing to put this trade together and pay this amount for today, okay? So what that means is you're telling your broker that you are willing to enter the trade for $24.90, and your request is good just till the end of today. If you decide not to fill my order of $24.90, then I want this order to cancel automatically after today. So in Canada, the market is open from 7:30 a.m. till 2 p.m. So if I were to, let's say I put in this limit order to enter Apple for $24.90, and after 2 p.m., let's say after 2 p.m., uh, my order, my request didn't get filled, or my broker didn't accept my request to pay $24.90. That request is gonna get canceled after 2 p.m. All right, so that request that you place is no longer valid after today. So that's what day limit means. All right, let's go to Apple. So again, status executed means it's been the order went through. Your broker accepted your request to enter the trade. That's why it says executed. And this is what you basically wants to see when you're entering the trade. You want your order to get executed. Action, in this case, it's saying STC. What STC means is sell to close. So when you buy to open, you sell to close. So meaning what I did here is that I sold to close Apple. Like I entered Apple and then I closed it. So now this trade is already closed. How many quantity I closed? 1. Fill quantity 1. Limit price 7.40. Fill price 7.40. So again, limit price basically the price that you are saying to your broker you want to sell Apple. In this case, you want to sell this option contract for this price, for 740. All right. And again, the duration, I put day limit, as I wanted this order to just be good till the end of today. Okay, so right now, these are just the orders that have been executed today. As you guys can see right here, if you click this one right here and choose, let's say, a week, you'll see orders that have been executed for a week, and so on and so forth. You can go 2 weeks, you can go 3 months. You can always play around with this and see what actions you took in for today or in the last couple of weeks. All right, and this little icon right here, this little it looks like a filter right here. You just click on it, enter a symbol. Let's say you want to look up the trades that you did for Apple. You just put in the symbol right there, and the trades that you did in Apple will show up here. And this is for a week. If you want to change it 2 weeks, you can do that as well. You see them all in here. So all of these are just Apple. If you want to use this filtering function right here. All right, so let's go to executions. So executions basically is where you would go to see what you did, pretty much all of your trades are gonna be here. All of your trades that got executed, or that executed basically means what? All of your orders that got filled, that were completed, they'll all be here. All right. So again, the symbol right here, you'll see them right here on the side. Action, sell to close, buy to open. Remember, you guys, when we're entering a when we're doing a call option or a put option, we are just the buyer for both. So you buy to open and you sell to close. So let's use, why don't we use this one as an example. We're gonna use this one, Apple, right here. This one right here. So as you guys can see, Apple, I entered Apple on June 25th. All right, it says right here. The time place. These are tells you guys the time and the date that you entered the trade right here on the side. All right. So I entered Apple on June 25th. And what I did was I buy to open, because when you're entering a trade, when you want to buy a call option on a particular stock, you want to buy to open that trade. All right. And fill quantity, the number of contracts I did is 1. Fill price is 7.05. Total value is $705. So in order to enter Apple, to do a call option on Apple, I had to pay $705. All right. And what I did was, I decided to close Apple on the 28th, June 28th. So in 3 days, I decided to close it in 3 days. All right. How did I know? How did I know that? Because right here, you'll see STC, sell to close. All right, so sell to close basically refers to when you decide to exit the trade. So how you're gonna know that is you're gonna just make sure that they match up right here. So this one, June 28, 2019, 192.5 call. June 28, 2019, 192.5 call. So these are the same trades, right? Apple right here and this one right here. So I buy to open and sell to close. When I buy to open, I had to pay $705, and then when I decided to close it, which was in 3 days, I closed it at a price of $740. So the difference between $740 and $705 is $35. Okay, so you guys, just so you guys know, I'm just using this. This is my practice trade. Okay, so as you guys can see, I entered a trade on the 25th. And the expiration I bought is June 28. So in my actual trade, in my actual live trade, I normally wouldn't buy a 3-day expiration like what I did in here. This is super aggressive, and you're taking a lot of risk by doing this. So I bought Apple on June 25th and only bought a 3-day expiration. Okay, and like I said, you guys want to buy at least 90 days or 90 days to 4 months out expiration when you're doing a call or put option. In this case, I did a call option and with a 3-day expiration, just because I just want to see what happens. And also this is my practice trade, so I'm not that concerned with what happens, whether or not I lose money. Okay, so buy to open, sell to close. Remember that, guys. Buy to open a trade and sell to close when you're exiting. All right. So in this particular case, I paid 705 and ended up selling the call option trade for 740. So the difference between the two is $35. So that's my profit, my net profit in this particular trade. Okay. All right, let's go order executions. These four are really what I just use. All right. All right, so that's basically it. All right. Oh, I want to show you guys what these are too. There's also other ones on the side here. Watch list. You can use your watch list to. This is where you can go and kind of a number of list the stocks that you want to follow, that you want to kind of check, I guess. So let's say I want to do Facebook. You can go here. Wait. Yeah. Yeah, you can add any stocks that you guys want here under your watch list, so you guys can kind of follow the stocks that you want to I guess follow or keep track. You can add them here in your watch list. It's super easy. You just go to I don't really use this one, guys. Like, I make my own watch list on my phone, so I'm not very familiar with how to use this one, but I'm just gonna try my best and see what I can show you guys. They have volatility. VIX. You can actually see the VIX right here. Okay. Yeah, so I guess that's pretty much it, you guys, for this video. I just want to show you guys oh wait, there's another one that I want to show you guys. I also want to show you guys the option chain. Okay, so why don't we actually go ahead and place a trade. I'm gonna show you guys how I would actually place a trade. Let's use Apple as an example, just because I like Apple. Okay, so we're gonna go and put in the ticker symbol here for Apple. It's AAPL, and you want to go make sure it's in option, under option, because you have two different choices here choose from. You have stock. STK stands for stock, and OPT means option. So you want it to be on stock, or actually, sorry, you want it an option. All right, so you're just gonna slide it down to option, and now this is where you're gonna see the option chain. So on the left hand side we have calls, on the right hand side we have puts. All right, so I want to do let's say I want to do a call option on Apple. So I'm gonna be looking at this side right here, this left hand side. All right, so I'm gonna choose an expiration of, like I said, we want to choose at least 90 days to 4 months out for expiration. So I'm going to go ahead and choose what about September? Let's go for October. All right, so I chose October right here, so you guys can actually see how many days until it expires if you were to choose October or September, but in this case I'm going to choose October. Okay, so it's going to show you guys option chain for October. All right, and again, if you were to choose October as your expiration date, you're gonna have 112 days till expiration. All right, and then I'm gonna go ahead and right here it's at 9. You want it to be at all. We want to choose all so that it shows you all of the different deltas that you can choose from. Because I'm gonna show you guys, if it's just at 9, you guys see that? You're limited. For in the money option, the ones that are in the money are going to be green. They're going to be highlighted in green, like this one's right here. It starts at 0.59, 0.66, 0.72, 0.78. But if I want to have more options, I just click all. And look what happens now, guys. You have way more options. You have way more delta. Like you have 0.99 now. You have 0.83, 0.88. You know, whereas before when we had it at 9, the highest delta is 0.78. That's it. See how you can only choose from these ones, so you have much less option there. So you want to go to all, and now you have way more options to choose from. So you're gonna go ahead and choose the delta close to 0.8. I think I would choose 0.78 in this case. So when you guys are buying an option where you're gonna buy to open, right? So in this case, we said we want to do a call option on Apple. We would just go to ask, you say bid and ask. We would go and click 0.78. This is the delta. We would just go and click this one, 24.8, and it's this tab right here is gonna pop out. It tells you guys the option type, call, so we're doing a call. Quantity, we're just doing one. Make sure when you guys place your order that you check that everything is correct right here. The expiration, the strike price, the type, just double check. Usually it is when you click the right the asked, this one right here, the ask price, you're gonna usually everything that's on here is correct, so you don't have to worry. But just to be on the safe side, you always want to make sure that everything is good to go and everything is accurate. So this is right, this is strike price is right, it's call, and we're paying 24.80. Okay, so whenever you're buying something, you're buying a call option or put option, you want to buy at the ask. So in this case, the ask is 24.80. So that's why the limit price right here says 24.80, because that's what you're gonna be paying for. All right. So you're just gonna go ahead and click buy. Again, you guys see this one here? Duration, this is what I was talking to you guys about earlier. So we have day, good till cancel, good till day. I don't really use the other ones here. I just go either good till cancel or day. And usually I just put day. And then you're gonna click when everything else is good. You're just gonna go ahead and click buy. And you guys see that? It shows you guys here the amount, commission. You're gonna be paying 9.95 in USD. And you're just gonna click send order. And there you go, it got filled. When your order gets filled, you're gonna get this message right here. This thing will pop out so to notify you that your order got filled. And once you did that, you can go ahead and go to your account again and click under positions, where you can check the orders that you've placed and the ones that got executed. Actually, once they got executed, they will automatically go under your position. If they're not executed right away, then you're gonna see them under orders, and you're gonna go to open, and they will show up here under your open positions. Because your order won't actually show up under positions until they're executed. That's why if they didn't get filled right away, then chances are they will still be under open orders. So you're just gonna go ahead and click here, click this one here, go to orders, open, and then they'll just be here. All right. Okay, I showed you guys a demo of placing an actual trade for a call option. And why don't we go ahead and try a put option, placing a put option trade. Okay, so let's see. I want to do a put option on, let's say, Tesla. I'm gonna do a put option on Tesla. So again, you guys are gonna be using puts when you think that a particular stock is going to go down in the future, in the next few days. So again, you're gonna choose an expiration of 120 days, 90 days, or four months out. So in this case, I want to choose, let's choose October 18 as an expiration. And remember, we're gonna go ahead and choose all for the strike price so that it lists all of the different options available to us with different deltas. Again, when you are buying calls or puts, you wanna choose delta close to 0.8. Okay, so let's do, you guys can see right here, delta, it says delta right here. This is what you're gonna be concerning yourself when you're doing a call or put. All you're looking at is delta. Okay, so delta 0.8. The higher the delta, the deeper it is in the money. So that's something that you have to remember. I don't really pay attention to the strike price when I do call or put on particular stock. All I care about is the delta, because I know that the closer it is to 0.8, the better off I am, the deeper it is in the money. So let's choose a delta of 0.82. So let's choose this one. So this one has a strike price of 290. See how way in deep in the money it is right now? Because you're saying that the Tesla has to move below 290 in order for you to profit or make money from this trade. And right now it's at like 219 right here, as you guys can see, or it's fluctuating right now. It's 218. So yeah, you're gonna have a lot of cushion there. Okay, but like I said, the stock still needs to move from where it's at right now. So let's say you decided to enter Tesla. You decided to do a put option on Tesla, right now it's at 218. Okay, if by the time you decide to exit the trade, Tesla still is at 218, then you're still gonna lose some money, although not all. I guess it depends on when you decide to exit the trade. But Tesla still needs to go below the stock price that it's at when you enter. Let's say we entered today and it's at 219. Tesla still needs to make a move below, okay? Below 219 in order for your option to go up in value. Okay, so we're choosing a delta of 0.82 for this example. So I click on the ask. You guys can see bid and ask, and I click on the ask side. When you're buying, you want to click on the ask side, okay? So let's say we said we're going to choose a delta of 0.82. Again, I'm going to show you guys where that is right here. The ones in the parentheses, 0.82, that's the delta. And we click on this, and now this order entry pop out. We are going to check if everything is correct. We decided to do a put. Yeah, that's correct. Quantity, we're doing one contract. Expiration of October 2019. Strike price of 290. Type put. Alright, looks like everything else is good. I just changed that because it was 6.90 now. Or yeah, and it was 0.995 earlier, so just want to make sure that they match, so we can get filled right away here. Oh, now it changed. Okay, let's go ahead and change it as well. We want to make sure that our order gets filled. Alright, so duration is day. Okay, so you want to place this limit order, and this is only going to be good till the end of today. Let's say it's 10 a.m. on a Friday today. This order limit is only gonna be good till either before 2 p.m. or at 2 p.m. Actually, it's before. It has to be before 2 p.m. Okay, so I'm gonna click buy Tesla October 18, 2019, 290 put, and send order. Alright, it says rejected. Alright, we're gonna probably have to play around with this because as you guys can see, the bid and the ask are changing because the stock price is changing as well. So we want to make sure that. Alright, I'm not sure what's going on with this one. It's acting weird because it's off after hours right now, you guys. So yeah, but normally, like, if you put in this amount right here, whichever is when you're buying an option, and you put the amount that you see under asked, the asking price, it should get filled right away. But in this case, I'm not sure why it's not accepting it. Anyway, so I hope you guys get the idea. When you're buying, you want to click on the asked. When you're buying a call or put, you want to click on the asked. You just click, let's say this one, click on the ask, and then look for a delta of close to 0.80. That's how you know that it's that you're choosing a strike price that's deep in the money. Okay, and you guys can see right here for calls, the ones that are highlighted in green on the left hand side, those are the ones that are in the money, and the ones that are out of the money are these ones that are not highlighted in green. Okay, so you always want to buy a call option or a put option that's in the money, deep in the money. Okay, as a general rule of thumb. Alright guys, that's it for this video. I'm gonna wrap it up, and I wanna ask you guys, if you have any other questions, just let me know in the comment section down below, and if there's anything else that you want me to talk about in regards to options, or if you want me to clarify anything, just comment in the comment section down below, and I will try to get back to you guys as soon as I can. Thank you for watching. Hope you guys have a great day, and I'll see you guys in the next video.